Oh, great. We're live on YouTube. Yeah, I'm going to share the link with you now. All right. They're coming. They are now the answer I'm looking for is how to go back and forth into the Zoom chat room and the live stream as well. This is good. I think this is good to see all the, to have this time to go through all the different options that are available, and then we can, once we get going, we'll have that momentum. Do you see the chat box? Let me see. You can write something. Okay, yeah, I found it. Okay. Yeah. I'm tempted to send the Zoom link to you. I mean the YouTube link. Oh, there it is. Boom. Okay. There's the link, and then I'll share this to Facebook. How do you feel about that? Okay. All right. I'm very shy now. It was actually. Oh, I'm sure there'll be questions. Of course, right? That's funny. How does this sound? We're live on YouTube and Zoom talking intro to stocks. This will think of nice content to like put with every well, I mean, maybe you have something actually like to put with every live post, like each time it goes out, like, oh, this is the template, right? So I can tag you on Facebook too. Yeah, how about LinkedIn? Yeah. Oh, maybe. Yeah, I mean, why not? Yeah. I feel like LinkedIn's content template is so much more formal. If we just had an audio, I think that would be good. I think we record this. Yeah. I think we record this audio because we're still piloting, I guess you can call it, right? This is a good pilot. I mean, even if we share it on LinkedIn afterwards, from YouTube or something, it's fine. But I think, yeah, since we're just piloting, I think I think Facebook and YouTube are good starting points just to test out, get it recorded. We can easily transfer it to audio and it's on Zoom too. Yeah, so that's on YouTube, yes. Yeah, sure. Oh no, I'm ready. Do you have the link? Do you have the link for YouTube? You can see it. I sent it in the chat box. You can. And I think people can also join as well. Right. Yeah. Yeah. Yeah, I'm excited. We've talked a lot about it, so it's good to share that information and help others. Mm. Right. Mm. 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 That would be an exact conversation. That would be exciting conversation too. Yeah. Mm. Yeah. Yeah. It's a funny, somewhat unexpected answer I would give, but because it really starts like very far back, being really young, maybe 8, 9, 10 years old, and playing games. But so yeah, but before I mentioned that, as you said, I was a stockbroker. I was self-taught actually so I was trading stocks before I became a broker, and then I had an opportunity to become a stockbroker, and I got my passed the licenses, and worked on Wall Street, worked at 2 different firms. Went through the process for about a year and a half, 2 years, building a practice with investors and making recommendations and working on teams of other investors as well. And prior to that, I actually interned at Merrill Lynch, Bank of America, for 2 of the top financial advisors in the whole company. So, I had really great training and experience getting started there, and then had a lot of hands-on experience actually working with clients and working in the market, and then also personally trading stocks. Now for about 5 years I've been making content on stocks and investing strategies. And much of that passion of doing that in the last 5 years has come from much of what you said, of seeing people paying attention to information about stocks without really, and overlooking much of the fundamental information and lessons. So what got me interested was a game called Neopets when I was probably like 8, 9 years old, and they had a stock market ticker, and it was dial-up. It was a dial-up game, and it was dial-up. We had dial-up service, so it was very slow, but they had so I was always trying to time the market. So they had all these. It's still available games. Not as popular kids game, I don't think, as it was in like 99 or 2000 or something. But I had my stock portfolio there, and I was learning how that worked. And then I started. You had movies that came out, and finance was just like this really cool, interesting thing, and being a stockbroker was like a cool thing that I always thought like, oh, that's like cool. That's I was attracted to that even in just like a game, as a kid. So when I was around 18, 19, I guess I'm giving you a very long backstory there, but that is really where the interest started. But I started to actually just teach myself with paper trading accounts. When I started working at Wells Fargo or Wachovia at the time, so I was working in the bank, and I had the idea of eventually working in finance and being some sort of financier, investment banking. But it was challenging because I couldn't really afford to go through college. So I was a community college, and I could barely afford that. So I couldn't. So I had to like drop out a few times. So I saw stocks and investing as really my only option or my best option to actually have a better life and be able to do more. So at that time I was professional dancer. I was doing a lot of different things that I'm doing now. But yeah, so that was really where the interest solidified, and I would be on Investopedia.com for hours, even when I was at work, just learning about stocks and reading through all the definitions, and really just pretending that I was in school teaching myself about stocks and just what that would look like, and just looking for any resources online to do that. And I was working with paper trading accounts, which are there are profiles, online profiles that simulate trading activity with real stock market information. So they'll give you digital money. It's not tender. It's not real currency. But you can use that to then simulate trading activity with current stock market information. So Investopedia was a really big platform at that time, but now there are many more platforms that you can use. And that's a really great way to just really understand the emotional part of investing, because I think that 80% is really actually the emotional. And I don't think that. There are many people that say that the emotional part of investing is a large part of the decision making process that people actually take, but it's a large part of what needs to be learned or unlearned. And it's and it gets unlearned by learning more of the fundamentals and understanding what a stock is, why an investment is made or not made, and what's happening when you own an investment. So there are a lot of nuances that have technicalities that if you can understand that, it then it reduces the emotional impulses of that come into trading decisions, and then because those decisions also then become trading strategies. So when traders are thinking very emotionally about investing, that I want to get in when it's low and sell it when it's high, they tend to then build a strategy in that where they're asking questions like, okay, what's the stock to buy right now? What are you buying right now? So they kind of become one. But if the approach can be taken with a much more scholastic approach of just understanding the fundamentals and technicals of investment as a whole, but much more specifically stocks as an asset class, then it allows people to be a little less emotional and build strategies around fundamentals. So that's just really my whole approach, I guess. Starting from the beginning of my interest, where my interest came from, how it solidified, and my approach and thought process to stocks and investing. But yeah, and I'm excited to get into the conversation and talk about anything else, and hope to do more. Okay. Yeah, but so hip hop dancer. So I did a lot. I was part of some like startup dance companies, and so we would do shows, competitions. We did shows with like Cobbler Modern, Jabberwockies, some of those crews that were on America's Best Dance Crew, like the first couple seasons. So that kind of dance and like hip hop and I worked for a dance company, an entertainment company where we would do birthdays and like bar mitzvahs, things like that, weddings and events like that. So yeah, I did that for a while, and then also like coached a little, dance for my old high school, and this was when I was in New Jersey, yeah, and yeah, right, yeah. So I grew up in Sayreville, New Jersey, Middlesex County. It's yeah. Yeah, it was a nice time. It was a good place to grow up. I think it's become like or it's been like a really good family sort of like upbringing type place, very different than a city, which I'm in now. Yeah. Yeah. Ah, that's great. Okay. Mhm. Mhm. No, in that order. I mean, I grew up in New Jersey, yeah. Oh, right, yeah. So I moved to New York, I moved like to New York area where I moved back to New Jersey. It's like a lot of moving around, like moved to Baltimore, then back to New Jersey, and then to New York. But why I moved back to New Jersey to essentially start a ed tech company. And I was funny. I was actually talking about it yesterday with a few friends called Y Learner, and it was basically a on-demand tutoring platform. So, and had a website launch and all that good stuff. So I went there with that plan, but while I was, but ran out of money in like six months or so, and had to figure out a job. So I started applying to jobs, and a company actually, I didn't apply, but they reached out to me, and they were a boutique brokerage, and in Midtown Manhattan, and they offered me to apply, and I applied, and I got an interview, and yeah, and they sponsored my Series 6 and my Series 7 and my Series 66, and that's how it started. Yeah, Andrew Garrett Inc. And they're still there today. I think they're still in Midtown, like 2 Grand Central Tower, and that was how it started. Right. Yeah. So then after that, I went to another firm. Actually, my roommate invited me to come and join at his firm, and then uh, I went to to his firm for a couple months, and then decided I wanted to get back into the tech space. It was really what I always wanted to do, I guess you could say. But that was that progression. So I went to another firm after that first firm. But yeah, it was really just building a practice from there. Cold calling, researching stocks, and updating clients, and yeah, just kind of going through the process of building a practice from that point on. Yeah, for about almost 2 years after that. Yeah. Mhm. Yeah. Right. Yeah. It's when you were saying it, in a way it could be it could be very broad, right? Because you stocks could, there's equities, there's stocks, there's subtle differences in that. There's shares, so is there a difference between shares and stocks, right? So that's like actually a question that I was looking into. I was like, some of these terms are really interchangeable. But a stock, it could be easily defined as partial ownership, a unit of ownership in a company. And that can be defined whether it's a public company or a private company, or any company, because every company has a unit of ownership, right? If they don't have any stock, in a way their unit of ownership is the company, the one company. It's one stock. The company itself is a stock, in a way. If if you think like the word livestock, that the livestock is a unit of production for a farm, you can say. So it's essentially just a way to create a unit of value that can be transferred. That's some, those are like 3 different definitions for it, but really just a unit of ownership in a company. And again, it could be private company or public. Yeah. And now when we get to what are the various ways that a stock can be purchased, then you get into the different types of stocks, such as options, and bonds are different than stocks. Options are derivatives of stocks. So because a unit of ownership, could be actually owned in different ways, which changes the actual financial instrument. And I think it's a little bit further down than intro. But the thing is, a lot of beginners are getting involved in things such as cryptocurrencies, which are operating in some of the same ways as some of these other financial instruments so I think it's just something that people should be aware of, that there are like when you buy a stock, there are other financial instruments being traded alongside that stock that also could influence the trading activity of that particular stock. So the right. So I mean, when people are shorting the stock, right? So you have things like short squeeze, right? So you're shorting stocks. That can be done through buying options, right? So when your options operate differently than actual stocks, although they are still stocks. So, but the way that an option is being traded might affect the way a stock performs, and depending on a person's trading strategy, it could be affected by that. So many people who get in might have a short-term strategy and not really be aware of the effect of options activity on their particular stock. So an options activity could create some sort of short squeeze in the short term for a particular stock that someone is holding, and they may not understand why that stock is down or up so much at a particular time. And the thing is, so it doesn't really matter like if the stock is up or down. It just matters, do you understand why it's up or down? Because if you don't understand why it's up or down, then you don't really have the information to make a decision, to make a a a, a, co- a coherent, non-emotion, coherent decision, right? Because then without that information, then it becomes a more emotional decision. Yeah, I think depending on the what someone is. Or I mean, if someone's a technical trader, they'll probably just be looking at volume, PE, things that are a lot more like statistical. When people are more value investing or long term investors, they'll probably be looking at the 10K. Like I read 10Ks. I also like to read 10Ks. It's actually a really weird, because I think that if it's that is that it, there's we can read a lot of blogs and stuff about business, but a 10K is a business. Like, that teaches you everything that a business is. Their 10Ks and all these. So I like reading them. And so, earnings, joint earnings calls, that I think any strategy would benefit from actually listening on an earnings call for the company that they're buying or thinking about buying. But I think the trading strategy will really influence the information that somebody is looking for, which is why when there's so much information, but people don't understand the link between the information they need and the strategy that they're applying, the information just becomes a lot of noise, and then it's like, oh, this person sounds a little bit more like confident that I should buy or sell this thing, so I'm going to follow that confidence, as opposed to understanding, is this information relevant to my trading activity? And yeah, that. Oh, anyone can listen in on it. They're public companies. So all their information for these companies are always public. They're publicly traded. That's the whole point of them being publicly traded companies. So yeah, anyone can join these calls. Yeah. They are usually posted on their website. No, the company posted on the website. It's usually a phone number you call in a conference call. Just they they should. Yeah, I heard Clubhouse now. They're accepting payments, and with Stripe. Yeah, yeah. So I mean, I think I was just saying. Yeah, Yeah, yeah. Makes me want to think about Clubhouse and NFTs. That'll be a good episode. Yeah, yeah. And I do want to say, this is since we're talking about stocks investments, not investment advice or any particular buyer or sell recommendations, just general educational information. You have the banking system. I think helps support Italy. It helps support some of the early. They existed in various forms, but I don't know exactly when it started. You have always had markets. You've always had local markets, and they always have existed. Like I said, even like livestock. Or there's some form of that unit of ownership always existed. I think this actual stock market, I believe on Nasdaq or NYSE, they were found, I think, like in the 20s, maybe, or maybe even sooner than that. Yeah. Yeah, if anyone, yeah, where we got this recorded here, so anyone jumps in and knows the specific dates offhand, can put it in the comments or chats. Mm, all right. Oh, so it was New York Stock Exchange 1817. I was very 1817, not 1917. So yeah, much sooner. And I knew it had to be much sooner than that. Yeah. Mhm. Ray Dalio. Hmm. Yeah. Well, I mean, I think I can speak a lot more to the what I would think of the fundamentals part. I know there are a lot of really great investors that people can, you know, like listen to, can have really great opinions about where the stock market is going and where it is and things like that. That kind of perspective. I of course have my own thoughts, but I just want to like preface saying I don't want to I don't want to say there's a lot of opinions out there and a lot of smart opinions out there. So I would just add that part there. But I think that the fundamentals don't change. I mean, you're seeing now that it's about 200-year-old institution. So I think the fundamentals are always going to really remain the same. I think that what's really interesting to me are the different markets that are being created and that are becoming that aren't going to go anywhere. That they're real now. They exist. The crypto market, well, really just the crypto market right now, and just seeing how that's changing and connectivity. It's such a rapid change. Like it's not the something like GameStop. It seems like it happened. It's kind of happening overnight almost. It's the momentum has been building, but and now it's like that's something like that can happen anytime. So I think those types of awareness, that type of awareness will just be included in the trading marketplace. So I think that's what I'm looking at and thinking about how how connectivity and the retail investor and the different crypto markets are going to affect investors. I mean, are going to if they're going to fundamentally change the investing climate and how they would factor in, and those are the types of questions I'm looking at. How those new developments factor in to the decision making. Oh man, that's the one. We're good. We're gonna crush this, man. This is great. People are gonna love it. Yeah. Mhm. Right. Right. I mean, we could. Yeah. I'm gonna take a. I'm gonna see if I can do a selfie with us here. Yeah, we're not content creators. Yeah, but yeah. Yeah.